All right, traders, it is the 24th of July, 2017. My name is Jameson. Welcome to Behringer Trading. We're looking at a daily candlestick chart of gold. So what do we have? We can appreciate one thing is that we have this bullish angle of advance. The problem is that we lost this, and the character at which that we lost it is very bearish. So we can see that as we lost this level of support, we did so with a lot of selling pressure, a lot of supply, a lot of weak hands. Very bearish, right? So this is distributive. Looks like maybe we have a buying climax here. Here's our preliminary supply. Here's our buying climax. Here's our automatic reaction. Here's our secondary test. Here's our sign of weakness. This might be our last point of supply, and then prices break down even further. But let's not get ahead of ourselves. So what we have here is that we have the emergence of supply through this level of support. That's bearish. And then here's the other thing is that we have a lot of buyers, big buying effort. So we have demand. So we have big buying effort unable to break through this level of support. That suggests that they're selling in the strength, that there's some distribution as prices trade higher. So that suggests that prices are going to break back down. Now here's the thing. In the presence of so much supply, gold or anything can't rally higher until we backtest it and confirm that it's in strong hands, right? So here's the thing too, is we can't break down if there's still demand here, right? If we're bearish on something, if we think something's going to break down, we want to get rid of as much of that product as we can for the highest price we can. So if they know there's a lot of buyers that are present, then they're going to keep things, in this case gold, trading in a range at which they can short or sell as much as their gold to get the highest price possible. So in the presence of all this supply and in the presence of all this demand, I think that pins us here in this trading range. So I think that we actually have a tradable trading range here between 250 and 1210, 1215. All right, so I think as we're confirming this prior level of support here as resistance, that would give us a breakdown, into this 1225 area. So if we look at a shorter time frame chart, this is a 4-hour chart, and what I want you to see on the 4-hour chart is that we had a lot of buyers. A lot of buyers broke us through this level of resistance here, and then as prices broke down, we back tested this level of resistance, confirmed it as support. You can see there's no sellers, right? There's no supply. Now you can see, well, I won't get ahead of myself. So then prices rally higher, and now we're rallying higher on less demand, right? A lot of buyers, less buyers. So a lot of buying, we break down, and now we retest, we rally higher back into this level, and look, there's no buyers. And now we're seeing some selling. Now, this here is volume. So we're starting to see that demand is contracting, supply is expanding. This here is the delta. This is the difference between bids and asks. We can appreciate that we're seeing a greater selling imbalance that's present. Now we can visually see that here in the cumulative delta. So this cumulative delta shows us that as prices are rallying, that there's an increase in selling pressure. That looks like they're selling, they're taking profits on gold. There's probably some short sellers here, but the imbalance is negative. There's a bearish divergence. And that again, I would suspect would put prices back down into this 1230 range and potentially back down to this 1221 range. So in the near term, I am bearish on gold.